Good morning, good afternoon, good evening, everyone. Welcome to this FinEquity webinar, our last one for this calendar year on understanding the women's market through gender data and analysis. My name is Nisha Singh, and I am the thematic facilitator for Gender Transformative Solutions. And I'm co-organizing this webinar with my colleague, Jenny Morgan, who leads our Impact Pathways learning theme. We have a great session lined up with some exciting speakers. So thank you so much for joining today. We hope you find this useful and informative. And so we'll get started. I'll just give you a quick introduction to our stellar lineup of speakers, and then we'll give you an overview of how we're going to proceed, and then we'll get started. Jenny, can we move to the next slide, please? So we have Pablo Freund with Bear Maximum. He created the business case tool that was published by the Financial Alliance for Women, and he will be sharing more about the tool. We're very lucky to have him. We have Karyl, Akilian, and Karin Farsan from the Financial Alliance for Women. They will talk about how this tool has been used by members of the Alliance. We then have Jose Etchegoyen from the IFC's Banking on Women program, talking about how they have been using gender data in their work with financial institutions. And finally, we have Billy Rodriguez from Banco Lafice, Honduras, and he will talk about how they have used data in their work to serve women as customers better. So as I said, it's a great lineup, some really good content. Once we hear from each of these speakers about the tools that are available, how they've been used. We'll take questions along the way, but then we have time to go out into breakouts with each of the speakers, and you'll have the opportunity to ask your questions or suggestions for, some of the gender data issues that you've been struggling with. When you registered, we'd ask you questions about, is there a problem related to gender data that you've struggled with? What is the challenge? So we've asked our speakers to respond to that, but the breakout sessions will be an opportunity to go more in depth on those. So without taking up too much time, I'm going to now invite Pablo to get us started about using gender data. Pablo, over to you.
Thank you so much. Happy to be here. Happy to be with these wonderful colleagues sharing this work with you. I'm just going to breeze through a couple of initial slides, share with you really what we see across the board is that the women's market has been acutely and consistently underserved. So if we can jump to the next slide, the Financial Alliance for Women, thanks. The Financial Alliance for Women works across the entire value chain and supports financial service providers in the development of women's market strategies. And I'll let my colleagues from the Alliance share more about their work, but we're going to focus here on a conversation on this first block in the right-hand side, left-hand side corner in the development of the business case. And so we may go to the next slide, please. The Financial Alliance for Women, based on all of the prior work that has been developed, one of the key data inputs that is necessary when building the business case is actionable market data. And that's what this tool provides all of the users and the financial service providers, a mechanism whereby the relevant data for making the internal case is is going to be all in one place. So I'm going to go through really quickly how the tool works. And hopefully this resource will be useful to our viewership in their own journey in developing their internal business case to serve the women's market. So we may go to the next slide, please. The tool starts actually asking a user to input some data about, and this is a tool that's downloaded for any user. So basically they can manage all of the information internally. It just lives on a local drive. So it's not data that is being shared across servers or anything like that for the security-minded participants. But the idea here is really that by providing this initial set of data, as you go through the tool and start putting in more inputs, by the time you get to the end of the data, the tool, you'll have a very good understanding of that additional opportunity, and it'll be quantified in order for decision makers at financial service providers to be able to understand really what is at stake when taking that step to serve the women's market that is so chronically underserved. If we may go to the next slide, please. So these our tool is really based on geography-specific indicators. So it starts by populating, when you select a geography, and in this case, I picked Ecuador, my country of birth, to give the example. It immediately populates these initial dashboards and starts showing you a lot of rich data about the different aspects, demographic and the labor market, and it's all populated by the databases coming from our World Bank colleagues and IFC and different resources. But basically what we're trying to do is pull together all the relevant data so we can build a very clear perspective in a single tool. We can jump to the next slide, please. So another aspect of this is it will pull information about different aspects of how the women's market is being currently served. And this is information from the different demand and supply side surveys, such as the Findex or even the IMF's FAS. And the information that we're learning really is about the current level of service that is being reported through these surveys. If we may jump to the next slide, please. Another key data input is about the business climate and the legal restrictions or availabilities that may exist. It gives you some of the tax rates, different comparables in terms of building a business or the status of property, credit reporting, and different aspects so that anyone that's taking decisions can actually identify any structural barriers very, very early on. Next slide, please. And this is where the tool is most useful. So the tool also, by geography, will provide two different market sizing options that can be used in parallel or independently, which are the market size aspects. So what we're trying to understand is, from the total population, how many women and women-owned businesses can be served, right, in that serviceable available market, which is that green middle layer. And then you have the bottom upside down yellow pyramid, which is the target share of market. And in the tool, a user can select a specific target share of market in order to basically understand what how many individuals or businesses exist at that level, and begin to quantify the investment that will be required and the possible return on investment that can result from that share of market. So if we may go to the next slide, please. So basically, at the end of the use of the tool, what you'll have is a set of data that informs all of the different aspects, provides a profile, allows anyone writing a business case to make a brief about the prevailing business conditions, but it will also take those initial inputs and then compare them to the target share of market that has been entered across the tool. And what will be able to be developed at that point is an understanding of how many new customers is it possible to target with that share of market, making it easy for internal stakeholders to understand how serving the women's market might expand the business, hence supporting making the business case. So yeah, with that, Nisha, I will turn it back to you. Thank you for the opportunity to share about this really interesting work.
Thank you, Pablo. I know that was some of the slides, it was hard to read. The point was to give you a flavor of what the tool can actually do. I put in the chat the FinEquity resource guide, which pulls together some of the key resources on collecting using gender data and analysis. And this is one of the tools that we feature in it because of how valuable it is. And, why do we need to make the business case for the women's market? That's a question that, that keeps coming up. So I'm actually going to invite Karyl and from the Financial Alliance for Women to share a little bit about why the Alliance decided to ask for this tool to be created and how it's been used and what the experience is amongst the Alliance members. So Karyl, over to you.
So hello, thank you so much. And thank you, Pablo, also for introducing the tool. So as you know, the main issue why we are here all today is because we believe that women are the world's largest and fast-growing market, and we all believe that we, by targeting the women as a segment of this population, of the global population, we can not only grow our market, but also serve a largely underserved and unserved segment of the population by the financial institutions. So to serve the 85% of women globally, and because they take charge of the day-to-day expenses, we also know that they are a big actor in the SME scene. So 4 in 10 SMEs in emerging markets are now owned by women, and women control around 216 trillion of the wealth globally. So to be able to serve this market and to support our member actually in serving this market, we had to really create this business case tool, and it's widely used by all our members to define and quantify the opportunity in their markets. So as Pablo mentioned, the Alliance Business Case tool can help you as financial institution to analyze and understand at the national level key insights and trends on women financial experiences from respected global databases. It helps you estimate the size of the women's market by determining the potential number of women customers in your particular market. It helps you better understand not only the external market data, but the internal data that you already have in your financial institution, in your systems. And based on this, and with the help of the toolkit, you can build a robust business case to determine the commercial viability of the strategy. It also helps you calculate the financial projections of this project from the early beginning. So I want So this is a critical step in building your strategy up. And once you develop the business case using the Alliance business case tool and analyze the data from your internal MIS system, you couple that with secondary market research already conducted by others in the market, or you can conduct your own market research. So you now use this info to take a first step at sizing the market opportunity and identifying the segments within the women's market to target, which will help you frame your primary research before going into your own research at the next level to understanding the challenges your target market faces. Your secondary and primary research outcomes then become your key foundation to putting together your customer value proposition, which defines the value women customers will receive through your strategy. So obviously your CVP will include key financial and non-financial services, and this will help be the essence of your strategy and will also anchor you in your market as the bank of women. It goes without saying that it doesn't end there, as next comes the implementation phase whereby you need to ensure the proper internal alignment is put in place, including training and getting all needed staff on board. Last but no means least, you will need to do a full audit of all your marketing material and communication strategy to make sure that it's aligned with your new strategy targeting women. Of course, this is just a high level, actually a very high level snapshot of the journey to having a women-centered strategy and how it all starts with the business case tool and data analysis. In reality, the steps are much broader and include many sub-steps, and this is the Alliance strength, whereby we provide an A to Z knowledge of how to build the strategy, how to build a women-centered strategy with the help of our 90 global member and strong network with best practices from practitioners. So definitely you feel that this is a huge amount of information, but what we actually do at the Alliance is that once you become our member, we support you step by step to build a strong strategy, to build your research and then create your CVP. We connect you with women market experts across the globe, and where they will be your mentors to support you in really developing on the ground step by step your women-centered strategy. And not only that, we also provide support to grow the program to new segments, to other potential segments, to always cater for the women's market and the female economy. So Karyl and I are available to answer any questions you may have. Thank you.
Thank you, Karyl. Before we move into the next set of presentations, I just wanted to ask one question that I had is like, what are sort of the prerequisites that an institution would need to be able to get started with the business case tool, other than an intention to understand the women's market?
Yeah, so they need actually to download this tool and to start working on it. But I really understand the challenge in working with the tool and starting this whole journey, because the very difficult part is the first step actually in understanding all of this. So this is why at the Alliance we have dedicated learning programs for very early beginners, even for people who did not yet decide if they want, or financial institution, they did not even take the decision whether they want to target the female economy or not. So this is very important to join us at a very early stage. So this is when a financial institution staff member and executives and also board level members can really understand how to quantify this opportunity, how to use the business case tool step by step, and how to be able to use it at their level, at the level of their organization, at the level of their market, at the level of their institution and the country or the countries they are catering for. So this is why it's very important to really understand how to use this tool, and this is why we developed several learning programs, such as the Learning Series or the All Stars Academy, or any other kind of support to help the financial institutions actually understand the opportunity and use this tools.
Great, thanks. And I see one question in the chat, which is who can become a member and how do they become members? If you want to respond now or put it in the chat.
Yes, so we will put in the chat the details and we will share the email. So you can simply reach out to us and we will give you all the details. Any financial institution can become our member, and we support all kinds of financial institutions, from the fintechs to the big companies, banks, definitely insurance companies, payment gateways, and we have a lot of learning programs that are given by practitioners, by women's market experts to women's market experts. And this is really the value of being a member of this network, because you will get the real learning and the real insight from people who did the program, who really went through the challenges, and they are very successful today in their countries where they are operating.
Great, thanks. I see, Jenny, you have your hand up.
Yeah, just there was one question about the source of data. So in the case that Pablo walked through, that was specifically Ecuador information, but I think the question was about where the source data comes from for the tool. So I just wanted to make sure we saw that question. Maybe Pablo or Karyl could take that.
Pablo, you can answer that.
Sorry, I couldn't actually hear that.
Okay, it's okay. So actually the tool is providing a lot of data from all the markets, and they're just in one click, they select the country, and once they select the country, the tool is linking them to different source of data to really grab all the available data related to the women in their market. So we have almost all the countries there. It's embedded within the tool itself, and this is how they can get access to the external data. It's very easy. Once they download it and they select the country, they have access to the external data. And also the tool will help them identify and how they can extract and use the inside data, which is available on their MIS.
Okay, so it sounds like there's multiple sources of data.
And multiple sources, and everything is there. All the sources are mentioned, and from where this tool, and what's the year actually of the data that is used and featured, and everything is there, very clear. Everything is sourced, and they can use whether the PDF document to check all the sources, or the tool itself, where they input the country and they will have access to the data.
And the source put it better, Karyl.
Great. Hopefully, Carla, that clears your question. Thank you, Karyl. And thank you, Pablo. So we'll move on to the next two speakers now. We have Jose speaking on behalf of the IFC's Banking on Women program and the work they have been doing in terms of a data-driven methodology for banking on women. So Jose, over to you first.
Thank you, Nisha, and thank you, FinEquity, for having us. It is a pleasure to share a glimpse of what we do at IFC. I wanted to start this presentation by highlighting the importance of reporting sex disaggregated data. The latest information that we have about the finance gap in terms of access to accounts in financial institutions, which is from 2021, and is the Findex 2021 database that I shared in the chat, shows that the gap has narrowed from 7% to 4% worldwide, and that's that is really good news. But there's still a big gap in middle-income and low-income countries. As you can see, the gap in middle-income countries is 13%. So the probability of a woman accessing an account in a financial institution is 13% lower than that of a man, and it is 24% lower in the case of a low-income country. So that shows that there is still a big gap in access. And this is just access to open an account. The second point I wanted to highlight is the finance gap for women-owned MSMEs in emerging markets was quantified back in 2018 before COVID at $1.7 trillion. And that's a big gap that unfortunately during COVID has not shrunk. It has actually expanded because women were more affected than men during COVID. We're working on a more updated data for this. But why it is important to have sex disaggregated data? One, because it allows us to identify who is excluded. It allows us to identify what products are used and by whom. It allows us also to measure the impact of financial inclusion on development, on the needs of the women and how they differ from men, and what sort of products they need to be offered to women clients so that they are incorporated or added to the financial system. So that's the sort of data that we work on, and I'm going to show you, an example of what the IFC approach is in this field, and then Billy is going to show you how financial institutions have dig into their specific, portfolio, and he's going to show you some numbers that prove the business case that Paulo, Karyl, and Karin introduced us in the first presentation. So I hope this is a good and an interesting topic for you guys. So we'll move to the next slide. Thank you. So this is a highlight of a template of our approach at IFC. And what I'm going to highlight here is that it is a data-driven methodology. We start with a banking on women diagnostic, which is basically cracking into the bank databases to uncover the women and the women SME portfolio. We have some tools that we use for that. And then we complement the specific financial institution portfolio analysis with market research, because we want to understand what's happening in the market and we want to complement with the specific data of that institution. What is interesting is that in, I would say, 90 to 100% of the cases, the bank, when we present the findings, they tend to, have the first aha moment. We call it the first aha moment. That is when they realize how big of a women portfolio they have in their books. Because if you ask a banker, well, how many women you have in the bank, they will give you a rough estimate but they won't know the actual dynamics of the women portfolio, the characteristics of the women portfolio. What's the average ticket in, for example, in credit? What's the average saving? How loyal they are? That sort of data they don't know. I mean, they may have an idea, but when we finish the diagnostic and we present the the diagnostic in what you see the stage 2, the EXCO debrief, that's where banks really realize how big of a portfolio and how profitable of a portfolio they have. And from there we build a business case on how the bank can develop a value proposition so that that segment is better served, because just realizing that you have a portfolio is not enough. Measuring the potential of that portfolio, the possibilities of creating a specific products and services to that portfolio is what really makes a difference. So if we go to the next one, we're going to see, for example, what's our approach. So as I said, we start very high level. So we, in this case, in the case of Honduras, and you know what Bill is going to share with you guys in a few minutes, we started by identifying how many formal women businesses were in the market. So a total of 31,000 formal businesses were in the market, of which about 20% were led by women. So that meant 7,000 women-led SMEs. So then we compare that with the bank market share. So we estimated the bank market share at about 3%. The next estimation we made is the average line in the market. So we have some difference here, as you can see. The average size of the SME you know, credit line was 65,000, whereas for women it was 25, and that you will see is the case most of the time, where women lines tend to be much smaller than the average. And then we did the same calculation for the bank that Bill is going to present to you, and you can see that the lines are a little higher for the bank. Why? Because the positioning of this bank is on the medium to bigger SMEs, not so much on the base of the pyramid. That's why their average line is a little higher. And then from there, we said, okay, so if we develop women-focused products and services, how big of a market share can the bank, you know, get? And we said, okay, if you guys implement this this program, you would go from a 2.8% of the market, you will double it in 5 years to 5.5, sorry, of the overall SME market and 6% of the women market. And then below you will see the number of clients, and the percentage of women, as you see, is also increasing over time. That's one of the things that we want to see. We want to see a growth in the SME market share, but we also want to see a growth in the women SME percentage of the total. That's the intention of our program. So you can see that the projections look good, and then Bill is going to share with you some numbers. So going to the next one. And here I want to make a distinction. When we do market research, we not only look at the SME segment, we also look at the micro and employed or salaried segment. Why is that? One, because the micro segment tend to graduate into the SME segment over time. You know, although statistics show that, you know, 70–80% of the micro business remain micro, there is an 80% that graduates into the SME segment. And that is one of the feats that the SME segment has. So being a micro for a few years, you start to, you know, formalize your business, hire some people, you know, expand your network, maybe open one or two additional stores, and then you turn into a larger, more sophisticated business. And then the salaried piece, because many of the people that are employed in a company eventually may turn entrepreneurs, or they may have a business on the side to complement their income, their family income. So both the micro and the employee segments, women segments, are feeders of the SME and are important segments also to include in your women strategy. And then comes the definition, and this is something that it varies from country to country, from region to region. It's very, you know, we can say heterogeneous. But in general at IFC, what we use to define what is a micro, what is an SME, is employees, total assets, and annual sales. Those are the three dimensions that we use to define an SME. So if a company has less than 10 employees and less than $100,000 of total assets, is a micro. Or if they have less than $100,000 of total assets and annual sales of less than 100,000, they're also a micro. If they are between 100,000 and 3 million, either in sales or in assets, they are a small enterprise. And if they are between 3 million and 15 million of sales or total assets, they are a medium enterprise. This again changes and varies market to market, but this is the standard that we at IFC and the World Bank use to categorize and label companies. So going to the next one, we're going to see some numbers, some characteristics of the women market. And here, just to share with you, this is a study we did in 7 countries in the Central America region, and this is the consolidating information of those 7 countries. And what's interesting is that we consistently saw that SMEs, and in particular women SMEs, were, have pretty, we can say, homogeneous aspirations in terms of what sort of products they needed. First, they mentioned a line of credit. And what's the difference between a line of credit and a credit? The line of credit is a revolving credit facility where you pay a percentage of what you use. Whereas, a credit is a line where you take a certain amount, and over time you are making payments and amortizing what you have borrowed at the beginning. So the line of credit is a much more flexible product. It's a product that SMEs and women SMEs value a lot because it frees up capital as you make payments. And that's one of the products that seems to be more suitable for women and for SMEs needs. Then comes factoring, which is also an interesting product that is present in some more sophisticated markets. And finally, a credit card, which is something that it's a product that's present in most markets around the world. But beyond the product, one common, we can say, request that women SMEs had, and SMEs in general, is that they wanted more agile and simpler credit processes. Why is that? Because in many countries, we see that that banks and financial institutions have some sort of a strict, we can say, credit policy, and strict requirements. Many of them come from regulators. It's not the bank itself, but the regulator is the one that requires those. So the number of data, the amount of data that needs to be provided is pretty burdensome for SME clients, no? And then also working or having someone that accompanies the SME and the women SME into the process of accessing credit. So sort of a training program, a mentorship program, the sort of programs that the Financial Alliance for Women and others offer that helps the business not only to access credit, but to use the credit in a productive way. That is very, very, very important. So on the non-financial services side, what we have seen, or what the SMEs and the women SMEs have asked us, is to develop capabilities to help them on the finance aspects of their business, on the management or business management capabilities, on the digital tools, and finally on human resources, so on how to manage employees, hiring, promotion, retention, that sort of thing. And these capabilities are capabilities that target strengthening the SME business, that graduation process that I mentioned a few minutes ago from micro to SME, because it tends to require a formalization of the business, and finally to make them more resilient, more loyal, and more profitable. So this is the sort of analysis, and you can see on the pink side, the women's side, the need for non-financial services for this sort of support is higher than than their men counterparts, and that's a key component of the program. No, so with that, what I'm going to do is I'm going to pass the baton to Billy, and Billy is going to share with you guys what La FISE, a regional group in Central America, did based on the data that we pulled from its systems. Thank you, and pass it to Billy.
Yeah, and stand by right there, Jose. Stand by, because you probably know more about the metrics and everything behind the scenes, right? Well, thank you, everyone. So if we can go to the next slide. After everything that Jose covered, this was a diagnosis that we ran internally in our systems, and using that data that IFC shared and kind of brought it to us in our partnership, then these are some of the values that our business case identify with, the opportunity with the women clientele. So they're more loyal. Women tend to be more loyal when they're served correctly. And when we say when we're served correctly, that's a very key point right there. Serving correctly a clientele means everything that Jose was mentioning, having the right tools, ensuring that they have the right product. And when I'm talking about the right product is how you structure the credit side. If we do not understand their business model, or their cycles, then we can, as private banks or as business executives, we can cause a problem for those clients. So serving correctly, I believe it's one of the key components when we look into this, because that will definitely bring a lot of loyalty into that clientele base. So as you can see, one of the questions that I wanted to answer is, I wanted to answer that they were present. It was the challenges. So as you can see right here, one of the assessments they did on the loyalty part, it was determine the active clientele and in the segmentation. And to determine the active, it means clients that at least had one activity in the last 12 months. And so the challenge that we had in this part, it was regulation doesn't require us or our systems to capture this data, to capture by gender, to capture a lot of the key data that we needed to extract. So we had to do a more of a manual process, and that was one of the challenges. So I just wanted to answer that question as we go along. So as you can see, we see a higher active clientele in women, more loyal, so more than 10 years with La FISE. A lot is one of the key points right there, and the transaction usage as well in the products. So they're above the SMEs numbers. In the cross-sell part, they tend to consume more products. They're very balanced right there on the numbers. In the savings product, and that's something very, women tends to save more and consume more investment products. So they're more aware about the longer term goals, right? And they do want to have a safety net. They do want to have a little bit of savings. So and you can tell the numbers right here. They're slightly higher at 64 versus the 53 on our SME market. Risk tolerance, they tend to have lower risk tolerance than men. On the past portfolio, they're a little higher, but like I said, we have to really dig in, and because a lot of this data was, we had that challenging in capturing. And the AML level, they're slightly lower. Profitability, they make more transactions by volume, and you can see they're very similar in that category. And then credit balances, they tend to have lower credit balances. They had smaller companies, and Jose covered pretty much all those struggles and that differential that they had in accessing credit, lower credit lines. So then our goal is to shift this to, balance it And obviously taking into account all of this data, then we have developed our program that is focused in gender. And if we can go to the next slide, then we can talk a little bit more about it. So this is what our previous model was, and Jose did a pretty good job in covering our market specifically. We only had two segments. If you look on the graphic, what we had before was we had the commercial part and we had the corporate clients. So anything over $2 million was commercial, $2 million in annual sales or higher was corporate. And then on the commercial part, we didn't go below the 100,000 annual sales. So we really have an opportunity there, and that's what we've been working with the IFC. It's to uncover these potential markets and broadening our segmentation. As you can see now, we have 0 to 100,000 in annual sales, which will be our micro. Then we have 100 to 700. We have a third tier from 700 to 1.5 million. And then we go to 1.5 to 5 million. That will be our new commercial segment. And then above $5 million in annual sales, then that will be our corporate client. So determining a service model and portfolio allocation criteria by subsegments. So this pretty much takes us to the other part, which is, and the Jose was talking about it, is access to credit, simplified processes, flexing some of the credit requirements, because a lot of times that's what makes it challenging. We cannot take a business that has under $100,000 sales and ask for all the documents that we will do to underwrite a $5 million loan, right? So we need to understand our markets, and that's how we, in collaboration with IFC, determine the three models, the three lower models, and with simplified processes, with more flexibility to women-owned businesses, and then also simplifying, making the process faster. So a credit will take days using new scoring tools, new processes to have those smaller tickets really being very dynamic. So yeah, so like I said, the credit guidelines pretty much changing them based on the segments. So for example, some of those highlights is women-owned businesses. They have a higher approval amount. So for example, if 1.5 for 1 month, 1.5 for monthly sales, for example, that would be SME, standard SME. And then if it's women owned, then it will be 2 months worth of. So the approval amount will be a little higher. And then also the amount of months of being in business. Our standard is 24 months. So for women based, we've lowered it to 18 months. So that will give us additional flexibility, and this will make it more dynamic for us. So so this is all we've been doing. The program is in our pilot stage. In early 2023, we'll be rolling out to Costa Rica and Dominican Republic. So we're seeing it as a regional financial group. We're gonna roll it out to all of our region, and which in a phase 3 will involve other countries that are part of the group. So then if we go to the last slide, this is the part that alliances play a big role in when we have this type of initiatives, especially us being a private, coming from the private sector, is you need to bring different actors into the mix. So we have the IFC, which has been a super valuable partner in creating and documenting and getting all the data and structuring the whole program. We have Fundación Zamora Terán, which is developed the non-financial tool, our non-financial diagnostic tool for the SMEs, and then USAID as well, coming into for the value proposition. Also, one of the key components here is the partnership with DFC. One of the biggest challenges when you're an SME and you're new in the market is having those collaterals. And depending on the market that you're working in, there is a lack of collaterals. When I'm talking collaterals is, homes or assets that you can use them as collateral. And then, so this loan portfolio guarantee, for SMEs that it includes the 2X indicators and also COVID recovery. We're the only bank that has it in Honduras, and then this allow us to utilize it for our loan portfolio to cover up to 50%. So that definitely opens up for our credit committee to be more perceptive in the loans that we're bringing into the committee. So this is a very important part. The alliances, I think this is a fantastic model of how, when we want to promote access to credit and work with sectors that hasn't, they haven't been how do you say, they haven't been pushed before, or then this is a great way to doing it. It's, bring all the actors together in formulating, a value proposition that is, it's great. It's great for the project. So any questions?
Yeah, there are a few questions, Billy. So I'll start with the ones that are for you directly. There was a question about, could you repeat the adjustments to the loan process that you made to better serve women SMEs? You went through them relatively quickly, so if you could, there's a lot of interest in that, so for sure. Yeah.
All right. Yeah. So some of the adjustments, was the approval amounts. So making opening, instead of for example, I'm just going to give an example. If the line of credit will equals to 1.5 monthly sales, your credit limit, then for the women owned, we will make it 2 months worth of monthly sales. How long have you been in business? You have to have at least 24 months of business history. For women, we bring it down to 18 months. Also, well, those are the those are the flexibility. The other thing is making the smaller tickets, formulating tools like a scoring-based system, where as long as you meet some of the requirements, you go into a fast track underwriting versus having to do the whole file and do a manual process. Is they will do a higher valuation to the owner, and then taking some scores that we take, some indicators, some movement on your bank statements, and then making a fast track approval. So it's pretty much a tool. You upload the information, and then you get an approval or a manual review. So you'll fall into those buckets. So creating these tools have make it more dynamic.
Great, thanks. And I know Jose had put some of those details in the chat as well, so thank you for that. There was one more question on the DFC guarantee, whether it's a guarantee just for women borrowers, or is it for all your SME borrowers?
It has a component. It has different components for the SME, but it has more. Let's say it's for. Let's say we take it's four categories, and out of the 4 categories, 3 are focused on women.
Okay.
So yeah, so it takes more the amount of employees, for example, just to give you some of those indicators. So amount of employees, women versus men, is one of them. Board of directors or owners, right? Percentage wise, if it has a higher percentage of women, then it will qualify for that. SMEs, like those medium SMEs that are led by women, or they have a higher concentration on the board, then that will qualify for that too.
Yeah, so
And
that's
then and then COVID recovery is all our SMEs that were affected by COVID, and they're in the recovery process, or in the COVID, medical, and then those will qualify as well. So it's very the very focused on our program that is geared towards credit access for women.
great, thanks. So that sounds like the 2X criteria, which you've mentioned on the slide. So it's the main pieces of that. Before we go into the breakout, I do want to ask one question of Jose and Billy about, you need sex disaggregated data to make the business case, but when there are no, it's not a regulatory requirement, as Billy said, then the incentives are hard, like why should the bank collect? So how do you make the case without the data for the data?
Great question. And that's, I think that I can use the case of LAFICE. I think we started discussing this project back in 2018, and it took us almost, 2 years to really, make the internal case, no? And as I said, what is interesting is once you really dig into the data, the business case is so strong that you don't need, to discuss it again. But to get to that first yes, that's the big challenge, no? And, it happened to us with, it's consistently happening to IFC, even with banks that now have very developed programs like Itaú or Banco Pichincha or banks in Africa and in Asia who we've been working with for a long time. The short answer is you basically have to work with the management team of the financial institution and talk in their own terms. So, tell them, well, this is, at the end of the day, this is another segment. As you have an offering that is focused on, the young population, as you have an offering that is focused on the, high network, as you have different, offerings for different segments, the women segment as its own has its own merits and characteristics. When you untap those characteristics, the business case again is very, very strong, no? And in the case of LAFICE, again, it was a long selling process, but the good news is that LAFICE has a women CEO in Honduras. So this in a way is her baby, her program, her child, and she's been a champion from the very beginning. And I think that really helps to have the buy-in from someone in the senior management. That definitely makes the difference. I let Billy compliment.
No, totally agree. I believe that like Jose was saying, it's a great leader as well, right? Not just because she's a woman, a woman. She's a fantastic leader, and she knows how to sell the program. And I think that a lot of when you have the data, and like as I was saying, once you untap those potentials and then you run your projections, is how you present it to the board. So making that commitment to turning that around, obviously, we're private bank, so we present to a board and you present the projections and where you're going to be in 2026 versus where we're at right now. And kind of along the way, right, having your checkpoints and making sure we're in the right track. And I think that's the biggest thing about working in collaboration with, private and non-private or, nonprofits, is we do have a board that we present every month. And we're very goal driven. We're very, that's the nature of business. So if we calibrate that and we can work together, and present, to the value and the projections and really stick into it and running with it. It's what Lisette was able to accomplish. She was able to gather all the data, get all the potential, run the projections, and present it to a board to get approval for it. So, and then you also have the challenges internally, which it helps out when you have a lot of, actually Honduras is, our bank is one that has, I believe, more than 50% of our leadership team. It's women run over here. So that helps out a lot too.
Great. And that really speaks to this other point that actually I wanted to bring up, Jose, when you had your presentation, the slide with your process. It's a data-driven approach, and some of it is building the business case, but there's also the gender intelligence aspect of looking at diversity and leadership and, using basically a more holistic approach to serving more women, but also looking at diversity internally within the financial institution itself as a driver for creating that buy-in, or also creating processes that allow or banks and other financial institutions to do this.
No, that's definitely key, and we have this. We can call it a gender intelligence program, which we implement with all the institutions we work with, and we start from the very top, from the board, all the way to the front line, to the people that are in contact with end clients. And that program basically creates the basis for valuing and treasuring diversity and inclusion. And that's something that, for example, in the case of La FICE, given the CEO was a woman and a majority of the senior management was already women, was not a challenge. But in other contexts, in other countries and in other institutions, that process may take a year. It may take a year to get people to understand the value of diversity, the value of having programs to hire and to develop human resources with an equality lens. That sort of program is key, and it goes well beyond gender. It is gender. It is origin. It is a religion. It is age. There are so many different dimensions within diversity that you can start with the women angle, but then you can explode it into so many other dimensions. And that's key.
Great. I could keep talking about this, but one takeaway for me is, the value of having more women in leadership roles and across organizations to get started with this process. What we're going to do now is, I see a few questions, and I'm not targeting them to our speakers. We're going to break out into some small groups, and you'll have an opportunity to ask more questions to each of our 4 speakers. So we're going to have 4 groups, one led by Pablo. 3 groups, actually.
3 groups, yeah.
3 groups, yes. So we'll have a group with Pablo, who presented the business case tool. We'll have a group with Karyl and Karin from the Financial Alliance for Women, and we'll have a third group with Jose and Billy. And you will be able to select which group you want to go to, who you have the most questions for. So you'll see that pop up in a second. And, select the group. We'll have about 15 minutes or thereabouts in the group. So I would encourage you, once you go into the group, to unmute yourself. And if you are able to turn on your camera, feel free to do that.
I'm glad to know that there's that interest in the tool. We're also constantly updating, so we're going to be going into that next cycle of update for the tool. So in the next 12 months, we'll likely be releasing a new version. Yeah.
But also all the sources, as I said, are mentioned. And if you feel that any data needs to be updated, you have the link to the website from where we generated the source, the data. And then you can check if this website have an updated data, and you can automatically do this. But anyway, we do update the data on the source. But if you are in a hurry and you're working on your tool, at the moment, you can automatically update very easily and use the updated data of any report.
That is great. Thanks for building in the flexibility.
No, yeah, it's super easy to use when you get used to it, and when you really go through the PDF that explains how you can use it, and you actually download the tool itself. So yeah, it's very easy to use and should be easy. As familiar as you might be with those tools and figures and numbers, but yeah, it's made in a way to be user-friendly.
Yeah, so be great. I don't know if there are any questions. Celia, if you have questions, we're happy to start with that.
Yeah, well, I think the angle is a little different. As I mentioned, I am from Kiva. We're not a financial service provider, but of course we work with a lot of the institutions. And I'm wondering is how, apart from taking the tool and work with it with the institutions, are there additional support at the Alliance that if we want to provide technical assistance support, how can we plug that in? And so that our portfolio companies can benefit and actually hurt them to use the tool, either with our in-house support, if we get to learn how to use it in a more professional way, or through the Alliance.
Yeah, so as I mentioned, we have a lot of programs that are built, learning programs that are built on the two sides actually of the learning is delivered. One side is the practical on how to use exactly the tool. And the second side is really case studies and real banks, how they used it, and what's the, how they maximized on not only the toolkit, because the toolkit is the first step of building the program. So what we really deliver is the whole scope, and we support throughout the journey. And this is the value of inviting your members, your financial institutions, to come to our program. So what we can do is that we can be in contact, we can include you in our kind of learning programs that we deliver to, because we have a couple of programs that are delivered to everyone, and there is some other more detailed and more focused and more, if you want, insightful, extensive learning programs that are delivered to members only. So what we can do is that we can inform you every time we have any kind of public learning courses or initiatives, the webinars, the in-person, whatever. And this way, all your network can benefit from those learning opportunities. And then the members, once they join, they can benefit from everything. So.
Thank you. And so for us not being a financial service provider, can we be a member?
We can take it. We can take this offline, and we can definitely discuss what's the best partnership that we can build together. So it's always a win-win, and we're all here in this room and in this conference, and even not in this conference, working on the same mission and the same objective, and this is what matters. So what we really need, all of us, is to close this gap to include more women in the financial sector. We are all doing a lot of efforts, and when we combine all our efforts together, so it's a multiplied effect, and this is what was emphasized by Jose and Lafise. So this is what really matters for us, and we always partner with a lot of institutions of all kinds. So our objective is really to get things done and support all the different stakeholders to deliver on this mission.
Thank you, Karyl.
So we can discuss, you can share your opinion, you can ask questions, you can any kind of conversation can be built around this. You can also share a concern, like a fear, for example, at this stage. I know that this amount of information, and when you are at this level, not really very in-depth into the conversation, you might like have a lot of question marks and gray areas, and this is exactly our situation, because I also come from a financial institution. I built a program for a financial institution in Lebanon before joining the Alliance, and I ran this program for 8 years, and I was in your position when you started this program, and I totally understand your challenges, the questions that are like, you can't find the answers in your head crossing your mind currently. So it's important to raise all these points and discuss openly, and hopefully we can have answers for you.
I want to encourage others who are in this group also to ask their questions or share their experience in, collecting and using sex disaggregated data, building a business case specifically. For I ask more follow-up questions to Karine and Pablo.
Hi,
Nicole.
morning.
Hi,
morning.
Nicole.
Morning, Karine. Yes, I'm Nicole Peter-Patterson. I'm a financial inclusion or consultant with gender and trade in the Caribbean region. Can you hear me?
Yes.
Right, and very instructive in terms of introducing 2X collaborative to the Caribbean. My question is really stepping back a little more, because the business case is so crucial, yeah. But where we're at in the Caribbean, it's really speaking to a community that needs to, first of all, increase their awareness and then get their understanding. So I was just wondering if you have some examples in terms of maybe how this business case tool was used in those different contexts, because the Caribbean setting is smaller islands and that kind of thing. So it's really about building an ecosystem. So if you have any case studies that you could share in that regard, it would be excellent to know. Thank you.
Definitely. I will share a perfect example for you, which is BHD Leon from the Dominican Republic. It's a case study of the whole strategy. So we don't have case studies specifically on the tool, but in the tool, we have a lot of examples using BHD Leon and other members that you can check throughout your reading of the PDF file of the tool. But we have a separate document that's public and that I can share, and I will drop the link just now in the chat. So it's the case study of BHD Leon and how, with the support of the Alliance, they were able to build their women strategy. And I know, maybe you know, that they are really a market leader in DR and serving women at different fronts. So I will share this case study. You can find it both in English and in Spanish.
Karine, I dropped the link. Sorry.
No, Nisha, go ahead, please. I was just going to tell Nicole that, aside from the really great case studies that are being shared in the chat, one of the important things is that the business case tool is a wider data tool, in the sense that brings a lot of different data sources together. So it will, you know, even that context setting, that awareness that you're speaking about can be derived from the tool because it can show you the important financial gaps that currently exist. And that is also part of building awareness, being able to quantify the need. So yeah, just
absolutely. Thank you. Absolutely. That's such a critical part of it, because in fact, for instance, in the Jamaica market, which is the largest English-speaking Caribbean, the from discussions that I've had with the relevant parties at the banks, they indicate, they confirm, listen, they don't even have sex disaggregated data. So I was also very encouraged for the previous speaker and hearing from Lafise that, you know, it's been about 2 years. So it's not, you know, in terms of the journey, you know, and building that commitment. So thank you for that. Yes, I really do believe that the tool can be valuable in that regard too, I'm sure. So I'm going to have a look at that. And thanks for the examples that have been dropped in the chat.
Great. Christina, you.
Yes.
Yeah.
Hi. Well, first I want to say, well, hi to Pablo, that I work a little bit with him, and it's always great to hear him and from him. And Nisha, I don't know if you remember me, back in the past, we kind of worked together. So you was one of my first mentees. So great to see you again. I haven't downloaded the tool. I think I have used it in the past. So I think my question is, one, how often is it like the databases are, how do you say, actualizados, are updated? And then if there are any by sector, because sometimes there are differences, but I think it's by country. And if you go by sector, maybe there are differences. If you go rural, you know, geographically in countries, I guess it depends if the countries are collecting this information or any other sources. But if you have found that, you know, if there's any sources of its, you know, rural areas versus more cities and things like that, like, can we find those type of data in the database? Thank you.
Yeah, so the last update was done for the previous edition of Findex, and that's why we're in the process of doing an update, given that there's a new one. There's other critical inputs that have changed. You know, the World Bank is relaunching what used to be the ease of doing business index. So there's a new data product coming out. The IMF financial access survey is annual, so we'll be able to update it with that in the coming months. So the current tool, like Karyl said, is it's interesting in the sense that we're able to give data, but it's not the most up-to-date data. The one useful thing there is that it is an Excel document. So if you want to use all of the same structure, but manually input into the cell the most updated data point, everything else should calculate and flow down through it. So seeing that we would have this update issue, the tool is designed to allow manual input. And then with your question about sectors, in some of the pages that track different aspects of an economy, there are, if a country is collecting kind of geospatially segregated data, you will be able to see different data outputs, but it does depend on the reporting entities. Yeah.
There's a question in the chat, Pablo, about sensitivity.
In terms of your question regarding your location, it's not a problem.
Okay, thank you.
Our structure, however, is that only institutions can be members. So we are a B2B organization. So we don't have individuals as members. So when you, for example, launch a fintech, the fintech can be a member of the alliance, but not Santi as a person on her own. We don't have that service because we don't work with the way the structure of the programs and everything is done is that we work with institutions. So all our members are either banks or fintechs or large tech companies or payment companies, insurance companies, etc. So we are a B2B2C basically. So it's our members who actually do the final work with the client. So that's how we impact the end user. But for us, our work and our commitment is to companies, and that's how we work, and that's how the programs are structured. And so today, the way you can benefit from the alliance is to have access to everything that we have that are public already on the website. So there's a lot of information. There are a lot of publications that you can download, a lot of case studies that we make public because we also want to serve a global advocacy effort to make sure that there is enough awareness around the female economy and that there is enough work that is being done. So that's part of our public service. But in terms of really focusing on the A to Z and everything on how to structure those programs, those would be for institutions because it comes with a lot of understanding and experience that we have within how to run this internally within the institution, with having the D&I policies, with really doing the internal alignments that are necessary, as et cetera, in terms of within the institution. So this is where the challenge is. So we can support you by having you go through the website and get everything that you need, and we can support you once you are at least you have the structure of the fintech put in place and you come in as the fintech. But as an individual, we cannot, not at the moment.
Yeah. Well understood for that, because also why I'm here, because I have the institution to do for the advocacy or for the media literacy. I'm coming as the institution. I think it is clear, like I said, we have in mind to set up like the in our holding the fintech, but now it's hold back because of the what we are seeing right now. It's not the right time. Like for Indonesia case, it's like before it's very booming, but now they are facing a lot of problems. But the way I understand, it's because the protocols is not professional enough. Sorry, but I don't know. I can only make the assessment, and then probably it's also too personal. But the way I see it's like that. You see, because now I'm in the group for almost a year, and I learned quite something from the fin equity. We still have that courage to do, but it's just like it is not in the right time right now. That's the way we are seeing, you see, because now it's coming at the declining trend in Indonesia. And we think that, okay, this is your...
I sent you our website.
Yeah. Thank you. So, very nice meeting you, and for your explanation is very well understand. And I think that if we cannot go for, but maybe we can open the communication later, yeah, if you don't mind, if I can have your email.
I will send.
Maybe we can. Maybe I would like to do from the advocate. We can enter from the advocacy states.
Okay.
Because that's what we are doing right now for the literacy.
Yeah, I think that's great. I mean, let's stay in touch. But just to say that normally our association is for profit institutions, financial institutions, not for NGOs and nonprofits. But I mean, at least we can communicate, and I can guide you on how to maximize on the learning from the website and where to find what. And which documents to really start with within the library, because we have a public library of a lot of publications and research. So we can start from there, and then we take it forward once that's done.
Because this is just like sharing, yeah, because like right now in Indonesia we have a lot of problems for the insurance. Yeah, that's the real case, and maybe that's a pop in my mind right now. It's also an opportunity, you see, to come. It's like the literacy for the clients, to the customers, and also to the providers, and also to the regulators, because now it's really a chaos.
Yeah. Yeah, no, I understand. I mean, unfortunately, it is what it is, right? Insurance is
Yeah. No problem. I'm not going to push you, but it's just like a sharing, you see. So that's why the way I see the opportunity when I'm talking to you.
Yeah. Hi, Yasmin has a question. Hi, Yasmin. I can't hear you. You're on mute, maybe.
Is it working now?
It's working.
Oh, sorry about that. The wireless headsets always cause problems. I see we only have 2 minutes remaining, so I know it's not a lot of time, but just to ask about, towards the end of the discussion, they were talking about you need the data to make the case for the data, right? And I wanted to ask about the members of the Financial Alliance for Women, kind of what drives membership? Is it that there is a champion who's a senior level in, the institution itself? Is it the investors who are coming in, who are saying, we are on the Data 2X Challenge, we want to invest in, women-centered or women-friendly institutions, and then the institutions go out and say, okay, let's join the Financial Alliance for Women, let's make this work. Really, I'm trying to understand the levers of the motivation to see. And the women's market is not homogeneous, obviously, and today's been focused on, women SMEs, but there are all other kinds of segments. So just to understand that dynamic a little bit more, and I'll spend 5 more seconds in posing my questions. One of the reasons why I'm asking about this is that we will be undertaking a project on promoting the collection of sex disaggregated data collection, but focusing on the regulators. And what should the regulators require that financial service providers report, but with a lens of making the providers more attuned to women's needs, right?
Let me answer you in 30 seconds, because that's all I have. So in terms of in terms of levers, so definitely having a champion that is very high ranked in the institution helps. 2, having investors that are willing to put money in speaks tons to institutions, financial institutions, because they're all about the bottom line. 3, having an internal team, if you don't have the top buy-in, who does the data, she sees the business value, presents the strategy to get then the buy-in, also works. So it depends.
Who's that internal team usually? Are they housed in like R&D? Are they housed in like, how does that work?
Strategic development, business development. Exactly. So these are usually where we see them the most. And then before they automatically close. And then to answer your question about central bank, so that is definitely a 4th lever that is very important. I think a lot of the times there is a lot of resistance because at the end of the day, if they're making the profit that they want, and are not willing to see the additional profit that they can make from really targeting, having a centered strategy around women, then once the central bank comes in and starts asking for the data that is sex disaggregated, then that is the wake-up call for them. But I think in terms of what the central bank should do, yes, they have a very key role. I think they are the people who can hold the magic torch. All of these institutions, at the end of the day, the minute the central bank says something, they run for it because they're all regulated. And so really there is a very important step on getting the central bankers.
That was your question, but please go ahead, because I asked it before you joined the room.
Yeah, I like to follow up with Billy and Jose. The problem arises like, I mean, you work in the Middle East, so you know there's a huge problem. But why in other countries, like the banks, financial service providers are reluctant actually to record even the sex disaggregated data? Like it is just, you just need an Excel sheet. So ownership, male or female, you can just write it that way, but they don't.
Is to companies, and that's how we work, and that's how the programs are structured. And so today, the way you can benefit from the alliance is to have access to everything that we have that are public already on the website. So there's a lot of information. There are a lot of publications that you can download, a lot of case studies that we make public because we also want to serve.
Has been collecting, and not only collecting, but publishing sex disaggregated data at the financial system level is Chile in South America. And if you look at those numbers, the story behind is not very pretty, because not only women have fewer access, but they are charged higher rates. And that's counterintuitive because, as Billy showed us, women are better payers than men. But what happens? What happens is that when you run your underwriting process, when you don't know who the client is, usually at the start of the relationship with the borrower, women are perceived as higher risk than men. Along the life of the relationship, they prove not to be, and they prove actually to be a better risk. But in the onboarding phase, in the first phase, women tend to be perceived as riskier. The main reason is because the industries or the sectors where women operate tend to be riskier. It tends to be retail, where the margins are very low. It tends to be, for example, hotels, restaurants, that sort of businesses, which tend to have pretty high fluctuations in their cash flows and that sort of. So initially, the women-led business is, again, perceived as riskier. They tend to be smaller. They tend to be less formalized. And they tend to have a more challenging situation in terms of also their marketing possibilities, because in many cases women run their businesses from home, and they don't have the luxury to go outside and promote their businesses, or they don't have the luxury to spend and to open, the business until 10 in the night, because they also have to take care of the family. So many of those characteristics boil down that the bank, when it evaluates the application, it initially sees at a riskier loan, and that they charge them a higher rate. So yeah, that's unfortunately the case. But over time, and as Billy said, what you can do as a financial institution to overcome that is to be more flexible on the onboarding. So like Billy shared with us, you require less history. You give them a higher percentage of more months of sales in credit because their businesses tend to have lower sales. So that's how you compensate. You may require also a lower credit score because women tend to have less history with credit. So that sort of measures helps you. And what it takes for, we can say regulators to get their hands dirty into women finance is basically a combination of willingness and some proof of the business case. And we're seeing that, for example, in Honduras, in Mexico, many of the regulators in the Latin American region, and we see that in Egypt, for example, Egypt is very progressive in that front too. The regulators are starting to, promote women finance, and some of them have even, in the case of Mexico, they have a new law or a new regulatory requirement that basically when you lend to a woman, the reserve requirement that the bank has is lower than when you lend to a man. So based on the data that they collected on portfolios, and given the women are better payers, then the bank get like a haircut of the reserve requirement of 4%. So let's say you lend $100 to a man, then you have to make a reserve for those $100. If you lend $100 to a woman, you only have to make a reserve for $96 because you got a haircut of 4%. So that's the sort of initiatives that we're seeing in the market from a regulatory point of view. I hope that answered the question.
Yes, of course. Thank you very much. So I don't want to hog the time. If anybody else has a question.
If you had a follow-up, go for it.
Yeah, please.
Okay, I will go for the follow-up then. Is it, all you are saying is, Jose, that is actually what we found, but is tax an issue? Because if women registered by her name, of course she will be taxed, right? So did you find that to be another concern there? And also, I really like the idea of the credit line, because then women, of course, are more risk averse than men. They can take a little bit return and a little bit that way. But if they need to do an investment, okay, buy an equipment or a truck or whatever, that credit line will not be sufficient. So will banks be amenable to provide 2 lines of credit, one for investment, another for working capital? How would that work for the banks?
Yeah, let me tackle the first one, the tax one, and that's an issue not only for women but for SMEs in general and micro. No, once you are registered with the tax authority, you're basically opening the door to get audited, to not only pay taxes, but if there is a tax increase, of course you'll get that. And it's hard. We are IFC in different parts of the world are partnering with tax firms so to give tax seminars and to promote formalization of businesses, so registration of businesses. And if the tax authority, for example, has some sort of program that favors women-led businesses, that would be a way, to basically get, some numbers, some enthusiasm by women-led businesses to get registered. Many times it's a matter also of, we can say, just a rule of business. No, in many markets, businesses don't basically don't register because that the how the market operates. No one registers, so I won't register. And I have this accountant, which is a friend, or which is someone in in my community, and he basically tells me what information I should report and blah blah. But then comes the moment when you want to apply for a loan, and that's where you say, oh, now I have to create this set of data, and I have to call my accountant to tell me what information I can share, what information I cannot share. So that creates, as people said, the three different sets of financial statements. No, the real one, the one for the tax authority, and the one for the bank.
So sorry, we got cut off right there at the end.
Yeah, and Nilofar, I can answer the second question separately if you want, but yeah, the line of credit and the credit for investment are complementary products that you would like to have as a standalone offering with separate terms and with separate, we can say, also uses. No, one thing is a revolving line for capital, for working capital, and a different thing, is an investment loan, which tends to be bigger in size and tend to require a longer term payment. Yeah, and you want to have both products in the offering, in your women offering.
Thanks, Jose. Apologies, everyone, for the sudden exit from your Zoom rooms. That we haven't quite figured out how to do that without everybody feeling Zoom-lash. But hopefully the discussions were very rich. In the group I know there were some very specific questions. There was a question in our group that we didn't get to answer, and so we'll make sure that that is answered in the follow-up. But I wanted to, before we wrap up, I just wanted to give a moment to our speakers to share a quick one thought on what, the value of collecting and using gender data for women's financial inclusion. So this is your Twitter response, and then we'll close. So I'll go in the order of the speakers that we had. So Pablo, you get to go first.
I will just say that, as more institutions are building data capacity, there will be more and more data. We'll keep on making more and more better decisions. But currently, we do have a lot of data available. So I don't think that we can continue to say that there is not enough data, because there is.
Great. Karin?
Yeah, so as you said, data is very important. It's the starting point, and I always say that we need to draw the line. So where do we stand today, where we are, and how far we are, so that we can always assess the great impact that we will create after launching the program in a year's time, in 2 years' time, in 10 years' time. And this is extremely important to understand that sex disaggregating the data is extremely important, not only to define the business case, but later on, it's even more important to assess the program impact, the global impact, and also how profitable is the program for the financial institution, because again and again, this is a business case. Thank you so much.
Thanks. Karyl, would you like to add anything?
Sure. I'll do a real Twitter thing and keep it less than 140 characters. No data, no strategy. It's as simple as that. I think simple.
Yeah, I love that. Thank you. Jose.
Well, as someone that worked many years in the banking industry, you may remember in the past we said cash is king. Now data is king. That's my tweet. You know, data is king. If you don't have the data, you will never realize the potential of your market. It doesn't matter if it is a gender market, if it is a youth market, if it is an elderly market, you need the data. And banks run on data and on business cases, as Billy shared with us. So again, data is king. Use it, treasure it, invest in getting good data. That's what I would say.
Great, thanks. And Billy, you get the final word of the speakers.
Well, look at that. That's why being the last is not always bad, right? So like Jose and the previous speaker said, the data give us the tools to have a finite strategy that gives us better returns. That's what we're looking for, and a more loyal base clientele. So I can summarize in those, you know, right there. As a perspective from the private sector, we need more returns, a better quality portfolio, and a very finite strategy where you know where you need to go.
Great, thanks. And data is key to all of that. So with that, I would like to thank those of you who've stayed on for joining us. And thank you, everyone. Hopefully, we've answered most of your questions about, you know, collecting and using data. But this webinar is part of a series. We'll have another one to follow up in February. And I will drop the link for the FinEquity Knowledge Guide, which brings together some of the key resources on gender data and analysis, to better serve women. So hopefully you will be using those resources, and we'd also love to hear how you're using it. As we close, you'll see a survey pop up. We would really appreciate, 30 seconds of your time and feedback on how, we did in terms of the webinar and what you might want to learn about. And finally, thank you to all our great speakers for sharing your insights and making a compelling argument for collecting and using sex disaggregated data to better serve women customers. Thanks, everyone.
Thank you.